Yo, 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 it's Mr. Joseph Trades here. Actually, my name is Joseph. You can call me whatever you want, as long as you watch, like, and subscribe. Hold on a second. We're off to a rocky start. I hope that's better. Oh, you might have seen my Tumblr here. Georgia had a very hard-fought victory against the Yellow Jackets. Man, that was an ugly game. Somehow Georgia won, despite a rough offensive performance. Fortunately for Bulldogs, the defense and special teams carried the day. So sometimes you need that. Let's just look at some charts. It's Friday night, the day after Thanksgiving. Got a long weekend coming up. I'm fortunate enough to have it with my son. He's in the next room eating his dinner. I invited him to eat with me, but he didn't want to, so I think he's chatting with his girlfriend. So, I understand. Maybe at some point this weekend he'll want to eat some dinner with me or something, but yeah, I'm lucky to have him. And yesterday got some great great dinner at my mom's house. She's a wonderful cook. Her name is Juju. She cooks quite a bounty. We had me, Connor, my mom, my dad, my sister Holly, and my brother-in-law Mac were there, and it was a really good time, and the food was tremendous. So let's look at some charts here, shall we? So this is a 4-hour chart of the NASDAQ futures. Actually, it's the micro NASDAQ, but I trade both of them. They're virtually interchangeable. Um, so actually the micros are a little more liquid, so sometimes they can be a little easier to trade, and especially during the overnight hours, pre-market, things like that. Just depends on the day. So this is a 4-hour chart. I try to keep my charts pretty simple. Let me explain to you what's going on here. So this is a 4-hour chart. Right here, this is an important indicator. I believe that's a 200 EMA. Yeah. And what do I mean by 200 EMA? That's a 200 period exponential moving average. So a good rule of thumb when you're looking at charts is whichever way price is in relation to the EMA is the way that you should trade. So when price is above the EMA, they say trade long, and when price is below the EMA, they say go for shorts. As you gain more experience, you can trade both ways, but a great way to stay out of trouble when you're just starting is to stick to the direction of the higher time frame bias. And so every day when I look at my charts, the first thing I do is ask, what's the higher time frame bias? And to do that, I look at the overall market structure, and I look at where price is in relation to this EMA. Now, sometimes there can be violent moves from the expected market direction. Like, say you were on this day, and you saw that candle on the end. You said, "Wow, that's a huge bearish candle. It's time to go short." And you didn't see from the past that there was an area of support here that got respected, and here again. And say you went short right there. What happened? Well, your face got ripped off as price, after consolidating for a few hours, proceeded to rip higher and test that 200 EMA. But anyway, these are some things I think about when I'm looking at charts in the morning, doing my analysis. I do trade futures. I only trade NASDAQ. I like it because it's very volatile, and it has price movements that, believe it or not, are repeatable, even with all the market players being the majority of them computers and institutions. There are still repeatable patterns, so that allows me to get an edge, and now I just work on sticking with my edge. That's the hardest thing. We'll get to that in a minute. So anyway, let's take a look at the market here. So if you said, what's the next move for this market? Well, to me, unless you're betting against the USA, it's pretty obvious that the overall direction tends to be up. Now, when contracts roll over, the old data goes away, so we could look at something like the QQQs or something, which is an index. It's actually an ETF that follows tech stocks, and so it has historical data. But so if you look at it from a really long-term perspective, it's fairly obvious that the trend is up. Now, you will have your occasional, events like the financial crisis of 2008. And they did quantitative easing. Basically, in my opinion, that's where this inflation problem got started, because they had to bail out all these big banks, and so they just turned on the money printers. And yeah, it looks good for equities if you own stocks and things like that. It's great, but for people who don't have those, and limited incomes, it makes everything. It's like a hidden tax over time. Inflation. I bet you can guess what this one was without looking at the date. Anyone remember? You want any bat soup? Does that give you a hint? Yeah, but then again, look at how it recovered. And the bat soup was a reference to a Norm Macdonald joke. So you see that the overall trend, you've got higher highs, higher lows, higher highs, higher lows. It's just the U.S. is going to tend to grind upwards until we get to the end of our dynasty, and who knows when that'll be. Hopefully not for a long time. But in general, when you see price touch the EMA and respect it, like here, that's a great time to go long. So, and right here is about the maximum point of pain for a lot of people. They freak out the most. Look at the volume on this bearish candle. And then look what happened on this reversal candle. And now we've got price heading up again. So back to the futures chart. Let's see. I believe that price is going to keep rotating higher in the intermediate term. So where are some targets for price? Well, the first obvious one to me are these swing high levels. If I were to swing a position, I would try to hit this 714 level to 786 level, and it probably will find some sellers there, because you can see there was selling there, and when that level came back, it respected it, and that actually precipitated a quite powerful bear move. So I would target this area about the 788 into let's call it low 700s level. If it makes it past there with strength, then obviously you're looking at it retargeting this swing high. And so to me, this looks like possibly a giant bull flag. Bull flags are really nothing more than bear channels when you think about it. Let's see if I can draw a good one here. Where would I draw these from to make it nice and pretty? Let's see. So where it found support, it found a lot of support right here. And then right there. You might ask, well, could you draw it there? Yeah, you could. In fact, I would probably draw it there because, and I'm going to change the color, because when it broke through, if you're a trend line trader, which I'm not, they're too subjective for me, and this is exactly the reason why. But say price broke below that trend line, you might say, it's time to go short, again without realizing there's an area of support there. But then look what happened right after that. Price started rotating up. So then you might say, okay, well, where is the upper bound of this bull channel, which is really nothing more than a bull flag, which is nothing more than a bear channel. Let's see. Could do it there. Could do it there. You see how subjective it is? Not a big fan. I sort of think that it could be there because price sort of broke out and rested on that channel, so sort of did a consolidation, and now it looks like it's pushing up. And look at this. This is interesting to me too. So this looks like a bull flag on a 4-hour time frame. Price is fractal, meaning the patterns repeat on any time frame. Let's take a closer look at this. Tell me what you think you see. I'm going to get rid of this. We have a strong move. We have, looks like a little bear channel, right? Don't like the subjectivity of trend lines, but they're useful for illustrating such concepts. So look, you could say that was a bull flag too. And we had a breakout, pretty strong breakout. Today was Friday, yes. When it was open, it had a strong breakout. Let's see, this was the early session hours. This was the 10 to 2 time frame, because this is a 4-hour chart. But just think about price is able to do things on a fractal nature. Like you can go to any time frame and see patterns keep repeating. Pardon me. Some of that pumpkin pie I just enjoyed. Okay. I've still got some more. Thanks, Juju. Actually, I'm going to stop and enjoy a piece. You know what's so good about it? Are the spices. Like you've got, I can taste cinnamon. I think there's allspice. It's in the actual pumpkin mix, and it's in the crust. She makes this crust by hand. I don't think there's any butter in it at all, so I don't feel too bad. Right. Well, to heck with that. You only get pumpkin pie once a year. You've got to enjoy it, right? That's what I say. So let's continue this conversation about the fractal nature of price. Let's see if we can spot another bull flag. Look, yesterday I made a video about don't trade in Thanksgiving. This was the video about it being in a range. See how it stayed in that range? And check out this behavior. What does this look like to you? Let me get rid of this magnet feature. Looks like a like if you didn't know that was coming, you would say it's in a bear channel, right? Well, the overall time frame though right now is bullish because price is above that EMA, and price has a tendency to keep doing what it's been doing. So if it's been going up, it has a tendency to keep going up. A lot of people get in trouble by trying to predict tops and bottoms. It's best to recognize consolidation patterns and be prepared for the eventual breakout. So right here, if you recognize this chop, which I showed yesterday in one of my videos, stay out of it because it was ranging. But you can see that it's in a bearish chop channel. I mean, look at that. Look how ugly that action is. Check it out. Sure, it has some lows and highs that are clear in a few strong moves, I guess you would say, but most of these moves, there's no clear break where it's just a body without a wick. I see very few. There's one. So if you were looking at this chart and you saw that, you could say that was a strong bear candle. But given the fact that this is a bear channel, which might be a bull flag, why would you want to short at the bottom of the bear channel? You wouldn't. A lot of people, when they see these rare impulsive moves in a range, they get confused. You can see another example right here. Let's say you were looking at the chart. It's looking very bullish. And then right here you might have a bull flag situation if it keeps popping up. But what happens? It starts reversing. Now you've got two candles that are overlapping each other. I call them non-trending, as opposed to these. You see how the bodies of these candles made a push? Now look at the bodies of these two candles. They're overlapping. Well, that looks pretty encouraging. If you're bullish, you might think that it would pop out here for a bull flag. That would be a logical and legitimate bull flag long. Typically, although I don't like to see it on the pole, I don't like to see a wick right there. I don't want to really. The wick represents selling. I don't really want to see that big of a wick on the top of a bull candle, because that means there's some selling going on. In fact, talking about wicks, look at when this one started. The wick was on the bottom. That means there was a lot of buying. And then, so price opened there, went all the way down there where it tested that VWAP, which is a key level, and it closed all the way at the top. Very strong sense of urgency, a lot of buying, and you see there was follow through. So back to the point, you could take a long off a bull flag right here, but this is not what you want to see if you're a bull. The next candle, a 2-bar bearish engulfing reversal candle. So if you're long from the break above this high and you see this candle, you're probably going, uh-oh, I might be cooked like that turkey from yesterday. And you might have been, because look what happened the next candle. Look at all those stops that got ran as price tested this key level, which is a pivot point. Key levels are important. But let's get back to, we have more overlapping candles. See? Price is just sort of chopping around. Now, right here, Somebody might see this big bearish body. That is a strong bear candle, but look at the context. The context is you've had several candles in a row that have overlapping bodies. There's an example, there's an example, there's an example. Again, that overlapped with that one. So you go short, uh-oh. There are buyers. Why are there buyers? Because that's the bottom of this range. So when you see a range, you don't want to be selling at the bottom of the range and buying at the top. You want to be buying at the bottom of the range and selling at the top. It took me a long time to realize that because I didn't understand this overlapping bodies concept, and every time I saw a strong candle like this, which was basically representing a vacuum effect to liquidity, in this case a vacuum to sell side liquidity, which is just a fancy way of saying the bottom of the range was being tested, then buyers are going to come in and buy. Alright, so those shorts who shorted right there, you want to talk about that Thanksgiving turkey. Alright, so, you know, a good place to take profit on a long might be the top of this bear candle, and that's exactly what happened when price got there. A lot of programs took profit above the wick of this bearish candle. So, you know, yeah, I would still say this is a choppy range, you know. Look, let's get excited. We see a big candle again. Uh-oh, let's go short. Oh, wait a second. Uh-oh. How many people are still holding by this point? You know, and by this point, if you go short on this candle, you're pretty close to getting stopped out anyway. And that was from Wednesday at 3:45 to 10:45 at night. Not many people who day trade are going to be holding a position that long, especially if there's that kind of chop. The point I'm trying to make is when you see overlapping bodies and they're not really moving with any sort of direction, more than likely, and also if there are wicks, a lot of wicks on the bodies, more than likely you're in a range, and that's the time to not be trading breakouts. There's a time and a place for that, but when you're in a range, you want to do the opposite of what most people are doing, which is they get excited when they see something like this, because the institutions are doing the opposite of people that get excited by things like this in ranges. So you want to be trading like institutions do, because they're the ones that move the price. So let's see. Let's take a look back to the concept about what is this. So then we get a real choppy bear channel. Low, high, low, high. Didn't quite reach the low. If you drew the trend line from there to there, you can see how it respected that. I don't count on price respecting trend lines. It's neat when it happens, but I'm not a trend line trader. I know some people make a living at it, but I do not like that sort of subjectivity. What I like are things that have solid levels and numbers that can be programmed and coded. And so the trend lines are too discretionary for my taste, but I'm using them to illustrate a point. The point being that price is fractal. So where we saw on the 4-hour chart the bull flag, if you look at this 15-minute chart, you see a bull flag. And then you see your breakout. And then look at this choppy range from today. Look at all this. These are called dojis. When you see when you see something that looks like this, that has very long wicks on the top and the bottom, and like a minimal body, that's a huge sign of indecision. And you can basically think of this one candle as a range. So, you know, there's a saying, don't diddle in the middle. You don't want to be messing around in the middle part of the range. Will you miss some opportunities? Sometimes, but you have to go with the odds. It just occurred to me, good grief, look how shiny my forehead is. That is not a good thing. That means I'm getting balder by the day. It's only a matter of time before I have to just shave my head completely and just let the beard grow to full effect. Look. Oh, it's so shiny. Oh man, I need sunglasses to look in the camera. Alright, but then at the end of the session today, which we had an early close of the session, what a move. A breakout of that range. Oh man, that was something else. So what you have to keep in mind is 80% of breakouts fail from a range, but there are breakout traders that when they catch the one that works, you know, if they have the proper risk management, they can do pretty well. Well, that's my look at futures. Now let's look at a few individual stocks. If you're still with me and you still want to hear what I have to say. If not, you're probably not watching by now anyway. My goal is to get 50 subscribers to my channel so I can do live streams. Right now I have 31. So I'm trying to get people to not only look but to subscribe, because you know, I want to be able to do live streams and you know, maybe have a sense of community in all this. Trading is a very lonely business. Alright, let's look at some charts here for individual equities. Here's something, Robinhood, symbol HOOD. Now this is a weekly chart. So a few months ago I had marked this up. This is well, what I call a huge saucer accumulation pattern, because obviously it looks like a saucer. And based on the depth of the saucer, when it finally breaks out, some people would call this a handle. You've heard of the cup and handle, saucer, cup and handle. I guess it depends on what type of you know, of teaware you use, but to me this just represents accumulation. And look at all this volume. I didn't even think about that to mention it. This is called volume by price. Look at all the volume, all the activity that occurred in this accumulation. Now, price had a little breakout above, and then it took a lot of liquidity. It took a lot of stops from people who were not strong holders. And look what happened. This, keep in mind, this is a weekly chart. Remember how when I said price will touch an EMA on a higher time frame, and if it respects it and shows that it's respecting, then that's a good signal? Well, look at this. So say you were waiting on this to touch the EMA to get in because you thought you had missed this run, but then price started retracing. That's what it calls when it starts going back after a big move in one direction, a retracement. Well, let's say the next week you saw this candle. Look at that. Big, fat, 2-bar bullish engulfing reversal. Why do I call it engulfing? Because the body of this bull candle totally engulfed the body of this bear candle. In this case, did it even engulf the wicks? Let's see, the top of this wick was 43.60. Yeah, the top of this candle was 43.79. So This was about as strong a reversal candle, in my opinion, as you're going to see, because price came and tested the moving average, which was going up, meaning you would want to go long. What do they always say? Buy low and sell high. Well, it's hard to know what low and high are, but when you have something that's been moving like this and it tests the moving average and then the next week it has a reversal, that's a pretty good indication that you would want to get in long, meaning you expect prices to keep going up. And what happened since? Good grief. All right. We're about to stop the video in a few minutes because my mouth is getting dry and my voice is getting hoarse, but I want to show you one other thing. Let's see. So when price got here and then got here, I was not in the stock at this time, and I felt like I had missed a lot of the move, but I've learned to be more patient in the past few years than I used to be. I consider myself to be more patient and wait for price to test key levels before getting involved in the main trend. I still like my breakouts from time to time, but I'm not a breakout fiend like I used to be. So when it did this week, I said, "Oh man, look at that! It moved from, well, let's see, 123 to 150 in 1 week, more than a 25-point move, a $25 move, excuse me." So you can feel a little FOMO in those situations. But then what happened the next week? It went higher and it reversed. Now that's not a bearish engulfing, but that is a bearish candle. So you might say, what's going on? Then you wait the next week, and you see this, and you go, we might be onto an opportunity. It's at this point when I would draw a what we call a Fibonacci retracement level, which means I find a swing low. I identified a swing low right here. And let me just show you how you do this on TradingView. I use my strong magnet tool and go down here so you see fib retracement, right? And for retracements, I learned from somebody, you do them body to body, and for extensions, which is another matter entirely, you do it wick to wick. But for this example, you would want to click at the bottom of the body of the beginning of the bullish move. That's a lot of B's. Wow, that's a lot of B's. Bullish body beginning. All right. Now, what would you do? You would attach it to the top of what might be the beginning of the bearish retracement. Okay, and that's going to give you certain levels. It's going to give you certain levels. I'll show you. There's what they call a 38.2 level. There's a half level, the 0.5, and all that means is price moves back in a certain amount, retracing the big swing that you've identified. These are called swings. So a move from that swing low to what I thought was the swing high at the time. So a lot of times, and it would surprise you, when price gets to a 38.2 Fibonacci retracement level, it will respect it and start moving back in the original direction. So check this out. Zoom in on it. Look what happened when price got to this 38.2 level. It wicked it. Buyers came in. Do you see that? These are alerts I have. I don't think it's going to get down to 95, so I'm going to delete that. Do I have any other alerts? No. So buyers came in at the 38.2 level, and then look, boom. That was last week. If you were just trading this like a short-term swing, You could have seen this on the daily. In fact, let's look at the daily and see when that actually happened and how you could trade it. So check it out. This is the daily chart. So price came down there, hit that 38.2 level. Some people went short there because they saw that big bearish candle and they said, oh yeah, here's a continuation. What happened on the next one? Disappointment. There were buyers coming in. You see the long wick on the bottom? And even though that's not a green candle, that's a bearish type of, a bullish type of candle, because there's a lot of buying going on. And you don't get a lower close. You got a higher close in the previous candle. So in this situation, what I actually did was I placed a buy stop above this daily candle. So the high there was 109.99. I think I wanted to enter at 110.47. So gave it about 48 cents of movement to the upside. And the next day, I got stopped into the trade, and needless to say, I've been happy with it since. I plan on holding this company for a long time, but if you were doing a swing trade, the level to target would be the top of this bear candle. That's called buy side liquidity. I think price is going to rotate up there, and I would put a short-term target at about 149. So that's just what I think can happen. And what does this look like? Hey, what does this look like? Our old friend. Let's see. Let's make it nice and pretty, which isn't how it works in real life, but wouldn't you say that's a bull flag? You got your bear channel, but it's in an overall context of a bullish move. So yeah, this could be a big bull flag. Now, there's also a chance, if this is a bull flag, that it might reject and keep rotating. So it's possible that I'll be able to add a quality company at the 50% retracement, which would be awesome, actually. I wouldn't mind that. I don't think it'll do it, but I'm going to go ahead and put an alert just in case. Let's see. Alerts are great because you look at charts, you have an idea of what's going to happen. You get an alert on your phone and you just do what you said you were going to do, and that's all you can really do in trading is follow your plan. So my plan is to hold it and see how high it can go. I don't know when I would sell it. Oh, yeah, I do. Probably around 300. Based on the depth of that saucer accumulation, I think it could get to about, that's a cockeyed level. Let's see here. Let me straighten that out. Yeah, that makes more sense. About 307 a share. And I think this is a monster company because think about all these baby boomers who have assets, who are aging, and who are going to eventually leave a lot of these assets to their kids. Well, the kids or middle-aged people, they're more savvy with technology, and Robinhood has really gotten a lot of the market share for brokerages. I've used them before. It's a really seamless app. It's a beautiful app. It works. It's smooth, and so I think this is a long-term growth story. So I think that even if you see this move, you shouldn't feel like you've missed the boat, because at the worst, we're probably going to have another leg up to about 224. I think in the medium term, we've got another 100 points upside. I would maybe consider taking some profits if it got to the 300 level, just because that makes sense based on the accumulation that went on for 5 years. Institutions just accumulating it, right? Institutions are going to buy low and they're going to sell high. I think they're going to let this thing run probably to about 300. And if you say you bought it around 20, if you sold around 300, yeah, I'd say that would be a pretty good return on your investment. But for people who haven't seen something like this and who feel like they're being left out, I mean, just look for these types of patterns on a weekly chart, daily chart. It's easier to see on a weekly, these big accumulation patterns, you know? Yeah, a big old saucer accumulation. And I think it's a long-term growth story. My eyes are starting to twitch. I think it's about time I got off of these charts. Woo! Maybe another piece of pumpkin pie would help. Let's see. Mmm. Okay. Well, guys, I hope you've enjoyed this little freestyle foray into discussing some charts. I would like to get more subscribers so I could make this a more interactive thing. If I had some live streams, people could ask questions. I've been studying charts intensely for several years. I've got thousands of hours of looking at them. And what I can tell you is, when you start looking at charts, you have no idea what you're looking at. But as time goes by, you pick up on more and more things. And what's beautiful about it is there are repeatable patterns. Despite all the robots, despite all the AI, it's just amazing that, you know, all the market participants in the world collectively continue to make these repeatable patterns, which is why I'm a technical trader, because to me it's all in the charts. And you know, just for short-term trading. Now, I'm not talking about long-term investing. You have to know the story. Like I discussed the big picture with Robinhood, but knowing charts can really help you make good decisions as far as entries go. Like if you knew enough technically to know about price respecting an EMA, or if you knew about that Fibonacci retracement to the 38.2 level. I mean, these are things you pick up over time, and I'm happy to share them. I'd like to share them with a lot more people. So if you found value out of this, please like, please comment, please subscribe, and please tell a friend. And until next time, Mr. Joseph Trades signing off.